Welcome to TradeTheNBI.com. This is John. This report is for the 14th of November. And, well, look at this lovely little retrace here. We hit the ABM green, bounced right off of it. We're retesting again because we came up on the upside of that 2731 previous algo from a daily standpoint. So we got a lot of daily and intraday action that are hitting at the exact same spot. From an NQ, if you just look at it raw, you're like right at that 23%, which becomes critical. And the question you have to ask, everyone says, well, it's 23% support. It means it's automatic. No, because there's nothing about this that's a buy. So the only thing that's holding it in place right now is the short-term buyers. This is going to have to turn around, and you're going to have to see that orange continue to dip in order to keep this from breaking down further. So this is always the problem with people who want to use raw Fibonacci's. If I'm reaching a critical Fibonacci line and I don't have a buy signal, that's not support, that's just a line. As I've always said to people who believe in the Fibonacci thing, show me one Fibonacci line that actually buys a stock. It doesn't happen. You need people for that. And while people are attracted to certain areas, you get to see that action. We see it in the DOC. They don't, because they're just playing with RSI, or they're playing with, stochastics or something like that, and this isn't going to give them the answer that they're looking for. Some will even use MACD in that, and that this is not going to get you there. From a Euro standpoint, of course, the Brit exit deal is in. Salvation, or not. More or less not. That cracks me up when you see this, rates rising through the roof, Fed not stopping in any way, shape, or form, and people actually wanting to buy bonds that are going to end up, from a TLT standpoint, moving lower simply because of the yield situation and deflationary situation with the oil. It's going to help the economy, but you reach that threshold. We talked about it the other day. When you get down into the 10 range, can be problematic. And then, of course, you have the president saying the prices were still too high for oil. Well, yeah, relatively speaking, but the lag in gas and that certainly is incredible. When you see this kind of drop, I don't think you're seeing the pump prices fall that fast. This doesn't work that way. And all we've done for gold was retrace the positive extremes right here, because without any significant inflationary pressures, fine, you have reduced workforce supply and stuff, but it still hasn't impacted wages to the point to cause inflation. And until that actually does, the Fed is just pre-selling the curve of inflation, which has always been a recipe for disaster. And you got to wonder what their thinking on that is. It's certainly going to explode the deficit as you watch me shrink the day's action so you can see how beautiful it looked. A lot of activity, but I mean, look at that. We had to crunch that quite a ways. We ended up series of extremes developed right in here. I had marked the line, put it in there right there, 27.29. We bounced around, came close to it one time, popped a little bit, and then finally we get the nice cleaner sell, but much later on, and that broke the lows and took us all the way down until we got a move over far enough here to where we ended up with significant buy. Still choppy, because if you look at this, even from this signal, you can see that it ended up making the lower low. It wasn't until we got the secondary P2 the things actually started to take off, and they really didn't even from there, because even from that P2, it still bounced around and then put in a P3. And then the orange on that one actually came a little after, when we actually turned into gold, and once it was the gold, that actually produced the non-stop move. And so sometimes you'll get this situation where it's like, oh yeah, okay, you had your warnings with each of these, letting you know where the situation was, and this should have propelled further, but it's that orange failure that clearly shows you how powerful that is. Expand it a little further right here. Let me slide this across. We'll do that one more time so you can really get a clear idea of what I'm talking about, because it's important. Because it really tells you when a move. Now, are you ever going to know ahead of time how strong that move is going to be? No, but what you can see is that building effect that you get on the red DOC as it starts to rise, which is why it's so critical. But when you have the green failing to stay above both cyan, a little bit less critical if you have rising red, but as soon as it crosses below orange, and definitely when green moves below red, you got problems. And that's exactly what happened. It created this flat storm, and it wasn't clear until this point where you got the strong signal, and then boom, at that point you finally have cyan underneath. And point-wise, you look at the difference between the two, this is a lot of muck. You would have to really be forceful and strong. Not to mention this one never had a full ABM reset. It happened from back over there. So, it's not always simple from those long standpoints. Likewise on the shorts. I was happy with this one because it was also corresponding to a previous positive extreme algo level. And then it's just the breakdown. And then once you're below that ABM, that's easy because then it becomes just, you trail it there. And this was stubborn for a long time. And then it produced a secondary entry. Then about a little later in the morning, we ended up with this gold below the 50%. And that, for me, is just a matter of waiting for a snake to develop right here. It started, it was kind of a soft one at this particular point, but you had the cleared DOC spread in effect, except for the fact that you hadn't been below the red, but you had the green cross and cyan shoot up at the same time orange was rising, and it became a clear right at the 38%, and then that produced a beautiful, beautiful decline. Like it when it's that easy. Doesn't always happen, but that's okay. As we moved across to the rest of the time period from there, you ended up with these little buys, and this is something I was talking to some people about. When you see no orange setup in that, but you've got a full buy off of a deep reset, I'll typically cover a large portion of everything, unless I'm trailing a much higher stop, because even though I know this is going to fail, simply because of where it's coming from off of that no orange setup originally from the first crossover, the orange did finally drop by the time you got here to this secondary one. Some of these can move a significant way, particularly if you've got a pretty decent move. It can go as much as like 50% back into that previous dip move and then break back down, which is exactly what it did, producing the other P2s, which was a little bit stronger before it produced its sell signals and came back down and made new lows with the gold below right at the 23%, which led to the zero level. But it's an important one if you're trading and looking to it, because like the other day when you saw I had traded up here above the 76%, the ABM, and then started trailing with the 50%, and someone said to me, well, why the 50%? Well, because I'm so far above here from the peak of the Morganacci that my expectation is a move down towards the zero. So once we broke below the 38%, moving to that lower stops, you start with the 61, and then once it got to the 23, then I go to the 50, and I just remain at the 50. And I said, well, but what if you had some buy signals? Well, you would have to have a pretty significant one on rising shakeout, and it's most likely, in my view, going to come after a P2. I'm not going to buy or cover all of it on an initial dip like that. And two, it becomes an opportunity where it becomes an easy trail to follow that along, and you're never going to catch the bottom doing that, no. Except for if you decide, hey, I've got increasing buildup, I'm moving to a positive shakeout, or I've moved well above the negative 13. You can see how like these below the negative 13, not so attractive, but by the time I get to this setup right here, I'm forming, well, what you would call a compressed, someone would call this a compressed double bottom right here, and now you're making a wider double bottom going over to this one, but it's on much better shakeout. In fact, you're almost moved to positive, and by the time you get over to this side on this P2, you're up to positive shakeout at that particular point. So you go just like -2, and then the next bar over here, you're positive. And that's a beautiful thing about that. See, positive makes to the 50% and rejects it. At least at that point, it rejected it right at the 23%, but was still a higher pivot point on the extreme oversold, and that led to the pre-market Brit exit deal, clear all the stops from all the way back over here. And it works out beautiful. Of course, all positive extremes, which have subsequently all been filled. So, right back to where everyone began at the beginning of the story. I won't let it run long. Momentary interruption of Isabella calling me, but that's all right. So here you can see live action. We've now broken below the 23. It looks like we're forming gold below the 23. So this looks like it's going to head even lower. We might get a nice revisit down to that lows of the day. But I don't want to go too long on this. It was good going over some of these more intricate configurations. I don't know why it does that. I wish it would just stay at the current edge. Just trying to expand that so it's easier to see what was going on here. From the start of a snake that developed right here, and this was another one, we'll get into that probably the next day. The beginnings of snakes, looking for the green breaking down, but the importance of them happening at the same time, the crossovers. So here you have the exact same crossovers of the steel below cyan and the green below orange. This is the effective beginning of a short snake right here, not before when the orange and the steel cross just because. Not only that, you also have lower red, a clear marker, so that becomes a beautiful short from 36, and here you are at 21. I mean, it's 15 points just like that. And that's the way these shorts work because markets fall 66% faster than they rise. Basic truth. Nothing about that makes anyone cry. It's just the realities of it. Exits always get filled up when someone yells fire versus, the other way around when people are just filing in to fill a theater. So keep that reference and you always know why things do what they do. As always, trade well. I'll keep putting up relevant charts on the Skype chat.